Pleasure.
I suppose let's get your view on the rate cut, because we're getting everyone's views right now. Any implication for the equity market going forward?
Yeah, obviously unexpected from our side. I mean, there are obviously big implications for certain sectors. I guess the banks would be hoping for, that this will stimulate some kind of asset growth, more lending, and presumably that was behind sort of Jill Marcus's thoughts. Near term, obviously the bank will face some margin pressure as the assets sort of reprice downwards. Generally, it took us by surprise. Our view was that the macro is very poor both in Europe and the US, but that perhaps the governor should have waited for some kind of sort of defining event in Europe, perhaps sort of Italy running into more troubles and then using the rate cut at that point. So our concern now would be that obviously if Europe ran into sort of problems, we'd have less scope to cut rates.
Let's quickly talk about Spain. You mentioned Italy, but Spain also in focus today. We had Spanish yields ticking up to 7.3% at one stage after that auction. They're coming out and saying that the Spanish state, will be liable for the €100 billion bailout. Your views on the Spanish situation right now as we see those yields continue to spike, and how this impacts the market if you've got concerns around a full-blown bailout being needed by the state?
No, I mean, Spain is in a lot of trouble. The issue that we've mentioned before on the show with the European banking problem is one of circularity. You effectively have the banks in trouble because they over-leverage themselves in Spain to the sort of property sector, but they also have too much exposure to poor government, to their own government bonds. And the one way which we fail to understand that the regulators are trying to sort of solve this problem is to force the Spanish banks to buy more Spanish bonds, but the bonds themselves are effectively toxic. So you're effectively, in our view, just going to spiral downwards till you get some kind of proper rescue of these Spanish banks, and that'll have to be with sort of external capital, not effectively pumping in Spanish government bonds.
Yeah, and it doesn't seem like there's any resolution in sight at this point in time. Let's then take it back to South Africa. Amplats, the third worst performing stock on the top 40 today, and it just seems that Neville Nicolai could not take any more of the pressure. You wonder if he was forced to resign. We saw that trading update for the first half, that dismal trading update. What are your thoughts on the future of Amplats right now, with the Kumba CEO going to be stepping in to take over from Nicolai's place?
Yeah, I guess from about February, March, there's been sort of quite a lot of rumblings around Anglos and Anglo Platinum. Cynthia Carroll, the CEO of Anglos, talking about a review of their platinum interest, obviously Anglo Platinum. And then ever since that time, Neville Nicolai not talking sort of the same talk around the severity of any kind of restructuring at Amplats. And I think that has finally come to a head. Anglo is reviewing what they're going to be doing with their sort of platinum operation, and this is obviously probably is the first step. As you probably know, a lot of the platinum miners at these kind of platinum prices are effectively burning cash, so it's actually costing them money to get the platinum out of the ground. And effectively what has to happen is that some production has to be cut. We've already seen that with Aquarius, but the big gorilla in the platinum space is effectively Anglo Platinum, and at some point they're going to have to take out their high cost ounces out of this market to try and pull the sort of platinum supply demand balance back into some kind of a deficit or balance at least.
Could this be a game changer for the platinum sector and platinum stocks if we see them coming out and aggressively cutting back on those higher cost mines? Is it likely that they're going to be, I suppose, aggressive in that kind of action in order to limit supply?
Yeah, look, in a rational market where South Africa controls sort of 80–85% of the world's platinum supply, you would have thought they would have already taken out the high cost ounces and brought some kind of normality back to their operating environment. Unfortunately, things aren't as easy. You have the platinum miners being massive employers in the Rustenburg area around the Bushveld complex, and government obviously trying to alleviate job losses has probably kept those mines going on for significantly longer than would be the case. If we do see those ounces being taken out of the market, I do think a lot of people who are short platinum physical or the platinum stocks will probably close their shorts, and you might see some kind of a bear squeeze both in the metal and in the stocks themselves.
In the meantime, Old Mutual continues to climb high. It's almost at 21 Rand right now. It was the second best performing stock today, and looking to buy back some of its debt, putting its cash that it has made from the sale of that Nordic asset to work right now. So where does this, if it manages to sell this 450 million or buy back this 450 million pounds in debt, where does that put Old Mutual when it comes to its total debt?
Okay, they originally said that they were to reduce their debt pile by about 1.5 billion pounds. They had about 2.5 billion to start with, but the debt reduction target for 2012 was 1.5 billion. They had done about 600 million pounds before this announcement. So this announcement is for 450 million pounds. We think there's still another 450 million pounds to happen in the current calendar year, plus about 200 million pounds to happen in 2013. So generally, using some of all of the proceeds from now the Nordic sale, and that should be positive for near-term earnings. You're effectively sitting on £1 billion of cash in the UK, earning very little to nothing, and you're paying on this debt sort of anywhere between 6 to 8%, and that obviously will be neutralised going forward as they buy back the debt, and obviously de-gear the balance sheet. One of the problems with Mutual, why it got so badly hurt in the global financial crisis, was effectively a sort of an over-leveraged balance sheet.
And before I let you go, Richemont, top performing stock today, up at 45 Rand 23 cents. It seems that the luxury goods sector is still going strong, and Hermes, the French luxury goods maker, coming out saying that China's not a problem right now. So you're still buying into the luxury goods space. What are your thoughts on that?
There's a lot of conflicting reports around sort of the strength of the Chinese consumer and sort of luxury goods. So Richemont has been a very strong performer this year, got up to about 52, 53 Rand sort of, in the last sort of 3 months. And then there was quite a lot of negative news out of China, and you saw sort of Richemont sort of sailing off quite severely. Last couple of days, maybe a bit of a bounce, and then sort of the good news out of Hermes. I would sort of look at an entry point into sort of Richemont below 40. So we nearly got there sort of a couple of weeks back, but it's obviously bounced from those levels. We think China, there's still a lot of easing to come, but I think the general growth rates will be a lot lower than the market expects.
I think everyone was hoping to get in when we saw that stock hit that price. Has rallied some 5 Rand since then. Thank you so much for joining us today, Johny Lambridis,
Pleasure.
Portfolio Manager at Element Investments.